Inflation is at a 40-year new high. What does that mean for home buyers and sellers?
If this is your first time to this channel and you want to know everything there is to know about living in Arizona, then subscribe below and tap the bell for notifications so you can be one of the first to know about the changing market in Arizona.
We get calls and emails every single day from people just like you looking for help in their move to Arizona, and we absolutely love it. Whether you're moving in 9 days or 90 days, just give us a call, shoot us a text, or send us an email. The contact information is in the description below, so we can help you make a smooth move to Arizona.
Of course, the Fed just announced new inflation figures for July.
It's exciting.
Yeah, so let's start. This is coming from Bloomberg, all right, but let's just read through this paragraph real quick. U.S. inflation roared again to a fresh 4-decade high last month, likely strengthening the Federal Reserve's resolve to aggressively raise interest rates that risk upending the economic expansion. So I'm reading that as, okay, recession's around the corner. All right. Last month we had a 3/4 basis point increase in rates, and I've even seen today a couple of people stating it could be as much as 100 basis points. The last 6 weeks or so, it seems like 30-year fixed mortgages were running anywhere from like 5.9. I saw them as high as 6.2, and of course people are freaking out over that.
Yeah.
All right, and rightfully so, because at the beginning of the year, you could get 3.1% on a 30-year fixed mortgage. But as of today, rates have been running around 5.3%, all right, on a 30-year fixed mortgage. So they have dropped.
Yep.
Now, given what we've just read from the Fed increasing potentially 3 or 4 more rate increases this year, it wouldn't be surprising to me to see 30-year mortgage rates, which are, by the way, tied pretty closely to the 10-year T-bills, to see those raised to 6.5% to 7%.
You've got really 3 factors that are, well, 4 that are messing around with each other. We're going to focus on inflation today. Inflation is definitely one of them. You've got the federal funds rate, which is what the Federal Reserve sets in order to try to control inflation. Then you have mortgage rates, which are not directly correlated to that federal funds rate, but they are certainly heavily affected by it. And then you have, in turn, home prices. All these things are intertwined, and you hear them all over the news right now. And it's important to understand there is a short-term roadmap of 3 to 6 months, potentially up to 12 months. And then there's a long-term roadmap. And I wanted to kind of frame what we talk about in both the short term and the long term, and understand that there are those 4 principles that are interacting with each other.
Well, okay, I totally agree kind of with where you're coming from. And the difficult thing for home sellers and home buyers right now is that we're in a state of flux and nobody really knows where any of this is going. And that's a real issue. We've talked about the fact that demand is what's fallen off right now. Supply, really new homes coming in the market, supply is about the same, all right, if we go back years kind of looking what's come on the market, this time. But now, buyer demand has fallen way off, and it's not just because interest rates have risen. All right, and let's look at interest rates here for just a minute. Because if you look at this century, all right, the last 22 years and average out what 30-year mortgage rates have been, they've been averaging 5 to 6.5%. So we're not out of line.
No, not at
we
all.
have been out of line for the last few years because they went down so low and really helped fuel the increase in prices. All right, but we're not really that out of line with where rates are right now. So if we aren't, and rates continue to stay where they are, the only way to bring the market back into equilibrium is for prices to adjust.
Yeah.
And every market's going to be different. The Phoenix market, we've seen prices increase over the last 2 years especially far more than the nationwide average, which means that our prices here are likely to drop more than they drop across the nation. But as far as, at least in my opinion, falling off the cliff, it's not going to happen.
In the short term, we did see inflation rise like crazy. We just got a new report that it's gone up yet again.
You know what? We never said 9.1%. Right? That's last month. It was like 8. Let's see. I think they said it went up 1.1. So
8.8, and now it's 9.9.
So yeah. All right.
So, inflation is going up, it has been going up, and as a response to that, the Federal Reserve has been raising that interest rate, which we talked about, which they're going to do. And, that is now impacting home prices. We are starting to see ours come down. But again, this is just a state of short-term adjustment to the chaos that's going on right now. They will take time. It will take 3 to 6 months to figure this out. I believe in the Phoenix market, home prices are going to continue to go down for the next 3 to 6 months, but not drastically so. In fact, you got a lot of buyers out there who actually can buy despite the higher interest rates and are choosing not to because they want to wait and see what's going to happen.
Yeah. Back in the Great Recession, which here we bottomed out at around 2011, summer of 2011, all right? And price decreases really started heavily in 2008. So, this was really an anomaly that we've never seen in the Arizona real estate market ever before. All right, but even back in that time period and during the recovery, at least up through, I'm going to say 2017 or so, homes would still sell relatively well and hold their value relatively well. It was outlying properties that weren't fixed up nicely. If you had a nice home and it was properly put together, in other words, it was prepared to sell, the buyers didn't feel like they were going to have to come in and spend tens of thousands of dollars to redo this house, the market was still strong. So it really went a lot in pockets, and I think that we're going to see the same thing now.
Absolutely.
If you've got a home to sell that is properly pieced together to market it, and it's something desirable for buyers, the prices aren't going to adjust that drastically. On the buyer's side of things, looking kind of at where prices are right now, I mean, keeping that in mind, if the property is really a dog, if we can say that, all right, you're going to want to be careful about how much is paid for that house.
Keeping this in the frame of inflation and the fact that, we're all wondering what in the heck does that mean for the real estate market. Inflation is going up right now, but home prices are starting to come down. And we know that home values are one of the big drivers of all the inflation we're seeing in the nation. We're starting to see prices come down, which will then trickle back down into the inflation numbers, and things will start to arrive at some level of normalcy. Again, that could be 6 months, it could be 12 months, or it could be 3 months. Nobody knows how long that is going to be, but it will find some level of normalcy. And I think that's the important thing, is you've got to wait to see these things through. Rates are going to still go up because, all this data is lagging. There's what everyone's feeling in the market. There's what the data shows, which is really based off of a month ago, 2 months ago. And then from that data, they make new policy. All these three things are going around, but you just need to remember that, 3 to 6 months, tighten your seatbelt, see what happens. But we're going to be just fine, and we're going to put this, because there's no impending doom, right? There's no subprime market like there was in 2008. This is a ticking time bomb. It's just everyone is adjusting to the recent changes to get back to normalcy.
There's been a lack of supply. That's the big problem. The last 3 years, there just has been a lack of supply, big time. Demand has actually been fairly normal. And as people back off demanding homes, they back off buying homes, that just creates more pent-up demand. All right. So when people start to get more comfortable with the equilibrium of what rates will be and the price of homes will be, there's going to be a voracious appetite for homes again. So,
and we've mentioned already, but just want to mention one more time. I mean, the market is shifting out of a seller's market because of all the stuff we've been talking about to what they would call a balanced market now. But it's really, at least in our market, feeling a lot more like a buyer's market, meaning if you are a buyer and you are looking to buy a home right now, you can get a phenomenal deal. Sellers are really working hard to get their property sold by listing them for lower, doing seller concessions. We've mentioned these in other videos, but now is a good time as a buyer to get a much better deal than you could get 6 months ago.
Yeah, and again, I mean, if buyers want to wait until, everybody's kind of comfortable again, we're going to go back to the point where we're supply constrained. We love Arizona, we know Arizona, and we want to share Arizona with you. When working with us, you'll never feel pressured to buy or sell, and you can reach us on our phones 7 days a week. Whether you're moving in 9 days or 90 days, we're excited to help you find the right home in the right area at a price you're happy with, all while having a 5-star experience.